And anyway, we're starting to broadcast. For any of my advisees in here, of course, Cindy and Co are here today. I'll have a sheet on my door. So please come to me because it irritates other advisors to have to do other people's work. Okay. If you're majoring in accounting, Johnson, of course, you're welcome to come to me and help you with your schedule or look at it even before Dr. Sneed signs it or whatever. We'll get him to sign it though. So I just want to inform you all that I'll have a sign up sheet for Tuesday of next week and Wednesday and Thursday before this class and after about 2 o'clock, and then about all day Wednesday. So you can pick one of those times. Be working on your schedule. Other people in here that might be my advisees, Delana Carson, I don't think I've ever met her. A lot of these are junior seniors. Justin Fox, I haven't met. Kelsey Hughes, I've never met. Hillary Lester, I've never met. And Terry, I have her in a class, or did have. Clayton Rickman, I have a Clayton in this class. I don't know if his name's Rickman or not. Jamie Seabolt, Jeremy Small, and Tanda Sutherland. And I thought, what was her name? The young lady that was pregnant. I thought,
Lindsay?
Lindsay? Yeah, Lindsay. Yeah, I think she's majoring in accounting. I don't know who her advisor is. And I think Monique is majoring in accounting. And I don't have Monique either. So, but anyway, just giving you a heads up about advising. That'll be for 2 weeks. I'm sure you can find a half an hour in there sometime. So forth. Okay, we have started broadcasting. I don't even have my book in here, so I'll run and get it. Okay, I appreciate you all showing up. More should. Remember, you get 2 points for the next test for each day you're in attendance between now and the next test. So if there's 5 days between now and the next test, that's 10 points on attendance. And it's easy to get. Just be here. Since I went to college, education's changed with all these electronics and videos and live streaming and broadcasting and web-based classes. You can get on the web, you can get a doctorate degree, a master's degree, you can get a preaching degree, I guess a degree of, what do they call it, divinity or something like that, ministry. But you get a degree online. Anything. On the ground floor of this, I was at the community college and I would have students on 4 different campuses. We had a TV, we could see the students on each campus. And it was done something by telephone, systems changed. And that's one way we used to do it. And I know community college, they stayed ahead of things. They even had classes when the iPod was popular. The iPod, the little slinky thing that you put all your music on. They even had classes, iPod classes that you could take using your iPod. And of course, then we had classes that we would do, the old big, I don't know what you call them, 8 tracks. Before DVD, was that the 8 track? It was, wasn't it? But we even had classes on those. They'd check out our lecture on the 8 track, and that was the closest thing to electronics. We're taking it on the web. So, but now we have live streaming, and when I came up here, I would have students at Beckley and students in the classroom, and I could do a split screen and see some of the students at Beckley or switch or something. So there was an old system up here. So that has improved and changed. And then we had the system we used in the fall that we had the Elmo, which I miss, and we could switch back and forth to you and me, whoever, which I miss. We pretty much just have what's on my tablet. And anyway, the tablet, if I set it up high enough, I could show the class and I could show me, but I took a survey of students and it doesn't matter if they see the instructor or not. And some students would probably rather not see the instructor. But anyhow, that's where we are today with a Surface teaching tool. But I have changed with the times. Some professors refuse to change. A lot of professors like the old chalkboard, which when I first started teaching community college, it was just me and the chalkboard, and I probably got white lung, but the old chalkboard has changed. So, but anyway, be thinking of your classes for next year. Be getting your registration papers. Be looking at the classes that are available and when. Pretty much, Cole, Jonathan, and Sydney, you all will sign up for intermediate accounting, federal income tax, and managerial accounting. It'll be your 3 accounting classes in the fall. But then next spring, the second part of intermediate, second part of taxes, and probably cost accounting. And then when you get to be a senior, that's advanced accounting, governmental accounting, computerized accounting. See if I'm missing one. Governmental, advanced, computerized. I think that would be pretty much your senior courses. You'll have about 3 accounting classes per semester in your last 2 years. It's not the easiest program in the School of Business, you know that. And it takes a pretty decent IQ to major in accounting. You know that by now. The accounting majors in here are doing fair. But intermediate will take you through it again. You'll be okay. Myself, I had a C in principles of accounting. From then on, I did better. But my instructor in principles of accounting, if a book had 28 chapters in it, we covered 14 a semester. Now we had 2 tests, test on 7 chapters and the exam on 7 chapters. All right, we had no notes. We had a time limit. I try not to give you all a time limit if you can come early or stay late, but that's how it was back then. But it gave me a good background in accounting. So I did well in all the other accounting classes. Okay. And the only time I ever felt I cheated on an accounting test, now up here, cheating is common, really. On this campus, cheating is common. Whether it's trying to use the phone and test banks online. I could give you a problem today for my test bank. If I mention a company like Mega Company, you could Google Mega Company. It would probably bring up that same problem with an answer. It's out there on the test banks, if we use test banks. So on. But anyway, how did I cheat? I had a Chinese professor, Dr. Chi, and I guess he was super intelligent. He said he never got a 1B in his life. BS degree in his master's and his doctorate. He got 1B. And he said, I got a B because I was from China and I came to the United States and I took a course in investments and they had all these ticker tape symbols before and Chrysler and all these other companies, and those were on a test. He said, I didn't know all those ticker tape symbols. So But so he got a B. But anyway, so I just had principles of accounting when I started working for him. And right away, he started me tutoring intermediate accounting. How did I do that? I did. I went to the lab, I took his solution manual, and I would show the students the solution, because I didn't know intermediate accounting. But he taught advanced accounting, and I graded his test this quarter system, every quarter, 3 quarters a year. When I was a sophomore, then when I was a junior, I'd grade that same old advanced accounting test about 6 times. He gave the same test 6 times. Naturally, I know all the answers. And he gives me the same test when I take his class. So I felt like I cheated. So, but anyway, that was a gift to me. I mean, I purposely tried to miss a couple of things so I wouldn't make 100 on that test, because the other students had a hard time with it. Okay, so things come and go. Now we're on a chapter. I think when we finish this chapter, it'll be easy going, and I will let you have a page of notes, whole front page on these 2 chapters or 3 coming up. That'd be 15, 16, 17 that we would be having a test on. And we're going to have to speed it up to get everything covered, because we're almost into April, and we got about 6 weeks time we get April and middle of May. And the semester ends, seemed like, about as soon as it starts. So we're going to try to look at a few exercises today. And I think I'd assigned exercise 2, 3, 11, and 12. So let's look at chapter 14. I don't think I had went over there's other exercises that we would like to cover, but we can't. All right, code was 11 on your assignment sheet. We're going back to assignments for, we're going all the way back to the assignments for Tuesday's assignment. It was 2, 3, 11, 12, 15, 16.
17.
Then I add on 17, 21, 1A and 2A.
It was 22. At least I have 22, not 21.
22?
Yeah, for sure. Then 1A, 2A.
Yeah. All right. Let's go back and look at 11, 12, 15, 16 and see what we got from there. 11, interest for installment. Whoa. I'm back on chapter 14. We want to do installment. No, I had on 15, but something looked funny. I'll tell you what looked funny. My book's missing. No. I guess it's not. Okay, now, page 750, number 11. Now, some of you out there probably live streaming. Text me this morning, please, at 276-964-3431 if you're present right now. All right, the equity method for stock investment. Provide the company's journal entries for the transaction involving its investment with the surveying company, then determine the balance of the investment. I've always told you to keep that balance. All right, now I need to find there's PowerPoint for accounting principles. Your solution. I don't believe these solutions like to come up. Yeah, they did. Always have a backup plan. If they're not on my computer, I have them on a jump drive, just in case. So You know, if you get your CAN degree, of course, you can pass the CPA. That takes 150 hours to take to West Virginia. And some students are often, you'll know more about this, manager on cost CAN, get the CMA degree. CMA for corporations is the same as CPA, Certified Managerial Accountant. And I was looking at the statistics the other day, and with 10 years of experience, those folks are knocking down 150 grand a year. So that's not too bad for the accounting profession. All right, on this one, number 11, investment in Sylvia Company and credit case. That's easy enough. All right, now we own a certain percent of this company. If you divide 480,000 by 1,000,002, did we look at this the other day? I don't know. Okay. Now divide 480,000 by 1,000,002, see what percent you get. Is that 40? Yeah, 12 and 48 goes 4 times. 40%. Now 40% is 750,000. All right, on this method, what I'm trying to show you, you debit cash and you credit investment when the company has income. And you turn around and debit investment and credit income of surveying company. All right, here's your dividend. Your debit cash, you receive 40% of these 750,000 dividend. You debit cash and you credit investment. Now, under the cost method, you credit dividend revenue, don't you? The only difference here, you credit investment in this company. And then here, their income was 2 million times 40%. So you got 800,000 of their income, debit investment and credit income. Now, to keep yourself a T account, like I said, 14,400,000, subtract 300, that leaves 14,100,000. Add 800, that gives me $14,900,000. All right, and there's your answer, 14,900,000. That's number 11. Any questions? Remember, the cost method, the equity method. Number 12 is more the same. Journalize the investment, debit investment, credit cash. And the company paid a dividend, you own 34% of the company. Debit, 34% of 24,000 they give out in dividends. You got 81.6. And whoa, here the company had a loss. So your debit loss, they lost 56,000, and 34% of that is your loss. So 34% of 50,000 will be your $19,040. So one we had a gain, one we had a loss. Two important concepts, this chapter, cost method, equity method. They're not hard. Any questions? If not, let's look at number 15. Fair value journal entries, trade investment. All right, here's the third concept, is doing this fair value. Number 15. All right, year one, we bought some investments, 551,000. That's what they're on the books for, $38 times 14,500 shares. But when we evaluate those, when you read problem 15 well enough, the value of those had went down to what, $42 a share? All right. Now you paid 38, right? Now they're worth 42. So 42 minus 38 is $6 gain. Now multiply $6, if you would, times 14.5 and see what that gives you. $6 times 14.5. Does that give you 58? Whoa, something's wrong then. It's got to. Take 14,500 times $6.
$4.
Yeah. Won't you all learn to subtract? 42 minus 38 is $4. Maybe I need to learn how to subtract. So $4 times 14.5 is 58, isn't it? All right, so that's your entry for your valuation allowance on trade and investment. Number 16, more of the same. All right, number 16, see how it's laid out? You had Griffith stock, Lux stock, Wilson stock, and total. You had number of shares. You had total cost. Now we have total fair value. You can see 117.5 minus 115.5. There's $50 in there somewhere. You're going to have a loss. Subtract those two and you get a loss of $19.50. So you debit unrealized gain or loss. Debit a loss, credit a gain, and then credit valuation allowance. One more way to look. That's the third concept in this chapter. All right, it looks like here we bought 1,200 more shares for $29 plus $100 brokerage fee. So our investment now is $34.9. And that's it. These exercises are pretty simple. Now, I also give you 17 and 21 for today. For value journal entries, trade investment. Here you have a total invested of $320,000. But the market price of that share is given, provide the journal entry. Now, first off, Co. divide 150,000 by 5,000, and Jonathan divides 66,000 by 2750, and Monique divide 104,000 by 1,600. All right, for that first one, what did you get, Co?
30.
How much?
30.
$30 a share. And the second one, what'd you get, Jonathan?
24.
$24 a share is what you paid. And the third one, what'd you get, Monique? 104 divided by 1,600.
$65.
65? 65 or 55?
That's 65.
All right, that's probably right. Now, look down at the fair value. Coal stock went up to $34 from $30. Jonathan stock went up to $26 from $24. And Monique stock went up from $65 down to $60. So now we can calculate our gains and losses, can't we? Okay, and make our journal entry. All right, but use common sense on these things. What I did there does not take a genius. Okay, now when you figure all that out, you had a gain of 17.5. So debit your valuation allowance and credit your unrealized gain. Now, here's the way they did it. All right, cost 150. They did it this way without, not the way I did it. And then they did the $34 share, 26 and 60, and they come up with this. So you see, we have a $20,000 gain on Arden. We have about a $5,000 gain on French. But you see, on Monique's, we had a loss of about 8,000. So those losses and gains add together gives you 17.5 gain. Okay. So we had 20 right there. 20, and then 8, 28. Oh, let's see, I got lost there. 20, and then 5,500 is 25.5. Subtract 8, leave 17.5. You can do the math. All right, and I asked you to do number 21 or 2, Cole?
22.
22? See, these entries are the same for all of these exercises. 21 would have been valuation allowance for available for sale. You got available for sale and you've got traded, but the journal entry is pretty much the same. And here you bought more shares. So, but 22 is what we're looking at. So, fair value entries available for sale securities. All right, you paid $263,700 for these things. Now you gotta take dust, $40 times 1,900 shares, and Gale and Whirlwind. You gotta multiply them out, see what the fair value is, and here's what we got: cost minus fair value, 263.7 minus 259.450. You lost money. The stock market has lost about 10% over the last month or so. It went down, it went up, it went down a lot. It was up to 26.6, now it's about 24. And for somehow or another, have any of y'all got an iPhone 7? Huh? What is yours?
I'm an 8.
You have the 8. Is that any better than the 7?
It's supposed to be.
My 5 was better than my 7. Huh?
I had a 5C that lasted like 4 years.
My 7 drops calls, don't kick back through powers or
My
anything.
7, like, it won't turn back on. It was dead for like a month, randomly turned
Yeah.
on, now it's not at all.
Well, my question is, Cole, you have an icon on yours that's black with little white. It came on mine, that's why I asked. You have that icon right there.
Stocks. Stocks.
Stop, yeah.
I'm in what?
Don't you do now hit there. No, oh, yours is green. Okay. So what they hit on their iPhone is the stock market. That's what it's doing today. It's up 97 points today, almost back to 24, but it had been 26.6. NASDAQ is up 12. It's been taking some big hits. The S&P 500, the 500 sweetest companies in this country, all right, biggest corporations, what this is gauged on. NASDAQ, you know, that's Microsoft and a lot of the technology stocks, Google and what have you. And it goes on down through here and gives you Yahoo and some of these others, and Google, and give you some of these other markets over the world. Some of them don't even know where they are. But anyway, that's the stock market. I look at it daily because as it goes down, my retirement goes down. With Bluefield State, other stock market investments I have. When it goes up, my retirement goes up. Okay? All right, that's the stock market. So you had it all on. Have you ever looked at it before, John?
Not really. I've just gone here to look at one thing.
Yeah. Anyhow, and it gives you some news about investment also. All right. So stock market goes up and down. But that's what this chapter is about. We're buying stock. You can make a fortune or you can lose money. And the one stock I keep like telling you about, because it's the one I'm the most proud of, is Disney stock. I paid 19 a share and it's over 100. So I just don't have enough shares of it. I could like the head. But anyhow, I just bought 100 for $1,900, but now it's worth over 10,000. I haven't looked at it lately, maybe down in the 90s, what have you. A couple things. What's the deal on Facebook? What's happened? Did they sell some of our information to some other company that got involved? Facebook stock's really been going down because of some kind of skin. What's that about? You know?
Yeah, apparently, it's,
Let's start celebrating. Have a lot of Facebook names, informations. This company, my favorite trucks, and lots of people, Facebook, and came up through Facebook, whatever. Something like that, okay. So Facebook, who's in competition with Facebook? Snapchat? So that's a competition they have now?
Twitter.
Huh?
Twitter.
Yeah. Tweet, yeah, tweet. Who uses Twitter? We do? I got an account, I've never used Twitter. Okay. All right, I guess it's okay, I don't know. All right, so here we are on this one. You had a unrealized gain of $4,250. These are available for sale securities, not traded. And then you had the valuation allowance for available for sale securities. So you have the two different accounts. Okay, now we've looked at all the exercises, and you had problem 1A and 2A assigned for today. I'm going to delay those to Tuesday. And I'm going to add on to that one probably 3A will be sufficient. All right. So 1A, 2A, and 3A are due Tuesday. Some of you may already have 1A and 2A done. 1, 2, 3A due Tuesday, chapter 15. And I want you to read chapter 16 for Tuesday. All right, so you have your assignments now. Now we're going to start looking at chapter 16. Maybe I can help you read it better. Okay? Now, I'm going to see if I have a PowerPoint. Chapter 16 is a statement of cash flow. Now, it's where you get your money. That's where your money goes. Where do you get your money? And where does it go? All right? Where do you get your money?
Make money.
Huh?
I don't make money.
You make yours?
I don't make money.
Do you spend any? All right? You got to get it from somewhere.
I guess my father.
Oh, gets his money from his money. Did you get any scholarships or anything? We may have got money from scholarships up here. Where's the money go from? That he got from scholarships and his father. He buys gas. And I think he likes to eat. All right.
Food is good.
Do what?
Food is good.
Yeah, it is. And pays his tuition, buys his books, and so on. Monique, you got a scholarship for playing softball?
Yes.
That's what some of your money. Now, do they just pay your tuition, some of your books, what do they pay for?
I got a partial for basketball and softball, and then just tuition.
They take care of all your tuition? All your books? You get any spending money?
Well, I get it from my mom, not from
No, you don't- from
scholarship.
scholarship, you don't get any money in case you had to stay, rent a place to be here. You don't get any rental money.
I did get a room waiver this semester.
Room waiver,
Yeah, but I sit at the UC, the fake dorms that we have, and I got a waiver, so I didn't have to pay anything this semester.
okay. All right, so, Jonathan, do you work?
Yes.
All right, so Jonathan makes some of his money. Okay? You get any money anywhere else besides work? Your parents still furnishes some money, okay. So where's your money come from? Where's it go? That's what cash flow is all about. And what do you think a business gets their money from? A corporation? They get it from operating. That's one place. Now they can get it from investment, or they can get it from selling some of their assets. The money's coming in from somewhere for a corporation, and it goes out. Pay accounts payable. It goes out to pay salaries. It goes out to pay utilities. So where does the corporation money go? Okay. Now, when your inflow is not as much as your outflow, you're overspending, aren't you? How many of you have a credit card? Oh, you're not working, and your parents give you a credit card?
Have to build credit.
Huh?
Have to build credit.
Build up credit. Do you use that credit card much?
Here and there. I use it for gas and all that.
But that's all okay with your parents. I've got a 25-year-old deadbeat nephew. It's hard to keep him working. He's had good jobs that gave him up, so I call him deadbeat. Lazy, but he likes on the computer games. He stole my brother, when my brother was living at the time, his credit card and got on the computer on an online casino and cost him about $1,500 in gambling. Well, my brother's dead, but he's still with his mom, and he's still deadbeat as ever. And he stole her credit card a couple of weeks ago and got online and bought a lot of stuff without her permission. So she's had to change her credit card, try to keep it hid and everything else. So credit cards can be good, credit cards can be bad. Okay? If you keep them paid up, if you get a cash back, or if you get some merchandise for points you build up, or Sky Miles, don't pay any fees for credit cards. So if you keep those credit cards paid up and pay no interest, they're big 24 and 28% interest, which is ridiculous. All right. But where does your money come from? Where does it go? So, okay, this is the chapter. Let's look at some important PowerPoints. It's used by managers in evaluating past performance. It's used by external users such as investors to assess a company's profit potential and ability to pay. It reports cash from three sources. Now, I want you to look at these three sources. This is an important slide. It's also in your book. You get cash from operating, whatever your business is. You do an income statement. The net profit ought to be cash, even if it's an item of accounts receivable. Now, two there, you get cash flow from investments, or the cash flows from transactions that affect investments in the non-current class of the company. Example, you purchased and sold fixed assets, such as equipment, or even stock, or building. And then three is cash flow from financing. How does a corporation finance? Anybody? How does a corporation finance? All right, they sell stock, chapter 13. They sell bonds, that's chapter 14. That's how corporation finance. Now they could borrow money on a long-term note. So that's three places you get cash from. Okay? And it also goes. Cash goes from operating. Cash, if you buy equipment, it goes out. And here, if you pay off your bonds, it goes out. So cash comes and goes under each of these three situations. The cash flows are reported in the statement of cash flows as follows. Cash from operating, investment, and financing. And you got a net increase or decrease in cash. All right. We'll be using the indirect method. This is the direct method. We'll be looking at both methods. All right, now I want you to look in your book at the indirect method. Find me a cash flow statement in chapter 16. Look at the one on page 781. Now, I don't know if I had that on the slide or not. I want you to look at your book. Yeah, I can't find what I want on here, so let's look at your book on page 781. Look at that cash flow statement. The first section is what? What is the first section of that statement? Cash flow from what? Operating activities. Now you got to take depreciation. Depreciation you always add back to your net income. You take your net income and add depreciation. Why do we add depreciation? Why do you think we add depreciation? To get net income, we took out depreciation expense. But why do we add it back to net income for cash flow? Because we did not pay any money out for depreciation. We bought the equipment some time ago, or built it. We don't pay any money out for depletion or amortization. So you always add those back. All right, that's the first point on that statement. Second point. Increase in accounts receivable, decrease in inventory, decrease in accounts payable, increase in accrued, and decrease in income taxes. Now that's cash flow from operating. So what they tell you there? Here is what they're telling you. If I can take a minute to show you. Okay, now look at what you have there. Those are current assets and current liabilities. Now look at a current asset. A decrease in a current asset is a plus. An increase in a current asset is a minus. Now, look at that statement and see if that holds true. All right. Decrease in accounts receivable, increase is a minus. You're tying up money in accounts receivable. That's a minus to cash flow. A decrease in inventory is a plus because you got money from selling your inventory. A decrease in accounts payable is a minus because you paid off some of your accounts payable. Increase in accrued expenses. Now, that's liabilities. So let's look at the other half of the situation. Current liabilities. A decrease is a minus. An increase is a plus. All right. Now, see if that holds true on the statement. Decrease in accounts payable is a minus. Increase in accrued expenses, your borrowed money, is a plus. Decrease in taxes is a minus. So a decrease is a minus. So I hope you jot this down when you start doing a cash flow statement and keep that in mind for the indirect method. Okay, now the second part is cash flow from investing. We sold some land and we bought some land. We bought a building. All right, then cash flow from financing. We sold some common stock. We retired bonds. We used it for dividends. All right. Now I want you to go back a page or two to your balance sheet. You got to get this stuff from your income statement and balance sheet. So I want you to go back to page what? Go back to page 773. Look at page 773 real quick. All right, I want you to look at cash up there. Look at cash. What was your cash at the beginning of the year? 26,000. What's your cash at the end of the year? 97.5. What is your difference there? 71 what? Monique, what is your difference? All right, I need everybody to look at page 773. Cole, what is your difference in your cash?
71,500.
All right. The reason I'm picking on you to show me that's your answer. You've always got your answer on a cash flow statement. So go back to page 781. All right. What is your answer down there? The third number from the bottom. What's your answer there? All right. Now your next two items is beginning cash and ending cash. Those are given to you too. Those last three numbers are your answers and they're given to you on the balance sheet under cash. So you always have a check figure. Now I want you to practice an exercise. I want you to try to dig out where some of this, what these things are. Go to exercise 16.3. Take 1 minute and tell me, is that operating, investing, or financing? You could even write beside them or another sheet of paper. O for operating, I for investment, F for financing. All right, take 1 minute and tell me what of the three categories those go under. So take a minute and do that. And tell me whether it's a plus or a minus on what section. Cole, you're going to have the first two, A, B. Jonathan, you're going to have C, D. Nicole, you're going to have E, F. And behind you, Monica, trying to get that name down. You're going to have the next two, G, H. And I don't know if Matthew has a book. All right, for Co, you redeem bonds. What section will that go under?
Is that financing?
It definitely goes under financing. Is that a plus or a minus?
Is that on?
All right, if you redeem bonds, that means you paid somebody for those bonds back, and that's a minus. And how about we issue preferred stock? Also financing and
It's a plus.
definitely a plus because you got money. And Jonathan, you paid cash dividends
Financing.
under financing, and it's a minus. Net income,
Operating.
definitely operating, and it is a plus. First thing on your statement. We sold equipment. Sydney?
I put operating.
No. Next one. Investing. Investing. And is that a plus or a minus?
Plus.
Definitely a plus. All right, we purchased treasury stock.
I put down investing.
It's under financing.
Okay, yeah, that was.
Finance because we're buying back our own stock, and it's definitely a minus.
Yeah.
All right. Whew. All right, we purchased a patent. What do you think? Investing, and that's definitely a minus. Then we purchased building, investing, and a minus. And anybody, we sold long-term investments. Under investment and a plus. We issued bonds. That'd be under financing, a plus. We're getting cash for selling bonds. We issued common stock. That's invested, and that's a plus. I mean, financing, that's a plus. All right, now I want you to look at number 2. I want you to do the same thing. Cole, you got AB, Jonathan CD, Sydney EF, and behind you, Sydney, the last 2, GH. Do the same thing. Where do they go? Is it a plus or minus? Okay, cool. We retired bonds. Don't matter what they had on them. So what section would that go under? We retired bonds. That means we had bonds outstanding and we paid to get them back. So, but where does bonds go though? What one of the 3? Financing, and it's a minus. And then we sold 20,000 shares of stock. Where's that go?
Financing.
And then it's a what?
Plus.
We got cash. And Jonathan, we sold equipment. That's investment. That's a what?
Plus.
A plus. And Jonathan, we purchased land. That's investing in a minus. And Monique, we purchased a building by paying 50,000 cash and issuing $450,000 mortgage. Investing,
Minus.
it's a minus only 50,000. We don't put the mortgage on there. There's no cash involved with that mortgage. So if you come across this, don't ever put a mortgage on cash flow. All right. And we sold a new issue of bonds. What do you think, Monique? Sydney, financing and plus. Then we purchased 1,000 shares of our own stock. What do you think? If you purchase your own stock, that's treasury stock, and that is financing, and that would be a minus. Then we paid dividends. That would be no, it's financing and it's a minus. Now, anytime you pay interest though, it goes under operating. It don't matter if you pay interest on bonds, it goes under operating. But if you pay a dividend on stock, it goes on finance. All right. That's to acquaint you with that chapter a little bit. Read it for Tuesday. And you got some problems due for Tuesday. So you're free to go today. And look for a schedule on my door next week as far as pre-registration. Try to sign up and pre-register. I better stop broadcasting, I suppose.